Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Monday, May 22nd. Starting the week with a lack of economic data, but we have a lot of talking Feds, and I'm going to provide you with the key statements from Kashari, Bullard, and some updates on the debt limit increase. So let's start directly on that. So, as you're aware right now, I'm usually providing this kind of information in a slide. For today, 22nd, the key statements are from the debt limit increase. Biden will meet McCarthy at 5:30 p.m. Eastern Time today to discuss the debt limit. And as we are going to see later on the charts, markets are waiting, markets are accumulating. There's a lot of volume in key levels, and I will show you why you have to be patient today. Feds Kashari, for me, it's a close call on June meeting whether to hike or pause. So Kashari doesn't have an opinion yet if we are going to see a hike or a pause, but at least it's saying that it's a close call, so they don't have the decision made yet. It may be that we have to go north of 6%. Oh my god, 6%. Remember that right now we are at 5.25. That would mean 75 basis points increase from now. But it's not clear. It's not clear. We can't protect the economy from a debt default. That's also important to note that they cannot protect the economy in case US goes into default. That's key to understand. The Fed's mandate and the Fed's position on all this going into debt default would be a disaster. And Fed's Bullard, we will have to move rates higher to tame inflation. Well, that's a must. This year, I'm expecting 2 more rate hikes. 25 basis points for 2 more times. That would mean 50 basis points, and we would reach 5.75%, not the 6% that Kashari is accommodating, but 2 more rate hikes. Bullard is going hawkish. The core measures of inflation have not changed much in the recent months, and inflation is staying too high. Core inflation. Remember that you have to focus on core inflation. Services and shelter are two of the main issues right now on the core inflation. And inflation is staying too high, which is one more reason to hike. So looks like they already have a lot of discussions and they have insights and opinions. So let's go directly to the charts, because as I was saying, this is the Nasdaq futures. Look at all these. Well, first, we just skyrocket high at the open. Why we did that? Well, we have to focus, we have to go to the ES to really understand the key level that we are now holding. This was Friday, and all this area around here was single printing going lower, big momentum. And if we check the 30-minute chart, that was a very big candle, very big red candle. And where did we stop? Exactly there. We just repaired the action process on Friday's big momentum to the downside, and we just repaired that and came into equilibrium right now. Look at the point of control on the ES. On the Nasdaq, the 30-minute chart, let's go to the 1-minute chart to see it better. We can see that after this big momentum, we just got the big flash due to some fake news on a large explosion near the Pentagon. I don't think that's confirmed, but after that, we kept equilibrium right here at these levels. Look at this, it's bouncing, 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 and it's now trying, look at this, this is the beauty of the markets. It's now trying to break again 13,900 and something. Between 920 and 922, there's a lot of resistance. So we are basically, look at this, This is just as simple as that. We are just in this range, trapped, waiting for the debt negotiations to go through. It's just a matter of being patient. Sometimes doing nothing is the best that you can do. And it's quite clear right now the markets are waiting for something to happen. And let me tell you, once something happens, we could just react to the downside or to the upside to really interesting levels. So for example, 13,800 to the downside would be the first target for me. And to the upside, I think pre-market highs, that would be the first target, pre-market heights. Continuing light spike on Friday, and these 14,000, I mean, if we have a deal on the debt limit increase, 14,000, that would be really, really interesting for the Nasdaq. But as of now, we don't have any deal, so we have to be patient. We have to be patient. Other markets, dollar. Dollar is seeing some kind of weakness, pullback to the 45 EMA. We have been respecting that, and I still think that's the move to the upside. Dollar is looking quite juicy to the upside. After we break 103, I think 105 it gets discovered here. And given that gold is also in the red, let's see if this level here, support, previous support, is now resistance. And I think we might see a pullback to the fifth retracement, 61.8 most probably, and we might find some demand there for sure. Other metals, copper, it's also seeing some consolidation. I think this is consolidation for a continuation to the downside for 3.5 on copper. And silver, it's also seeing a little bit of pullback, consolidation also here. This is my setup. This is my I think the move that we might see on silver. It all depends on the dollar, and we just have to be patient. But right now, fib retracement for 7,600, that would mean sellers might commit again for silver to really continue to the downside, as long as the same as other metals. Risk on. Let's see small caps. Well, after Friday's sell-off, today we just have a big brick candle. Bitcoin is also in the green, slightly to green, but this zone right here, let me tell you, this is too risky. We are at the edge of the situation. If we have this initial leg down, consolidation, and another leg down, don't belong here, because we've been since March, early March, in this support, and if we break down, this bottom tail might provide you a decent dip, but don't buy falling knives. And I think that's all. Banks are in the green. PacWest continues with the squeeze today, 22% in the green. And before I forget, the yields are going higher. The 2-year yield, the 10-year yield, and most importantly, December interest rate futures are continuing higher. And that means that more and more bonds market are not pricing in interest rates cuts this year. Do you remember when everyone was expecting almost 75 basis points cuts this year? Well, Fed continuously said that they are not expecting that, and more markets are adjusting to that. And I think this is good. Adjusting expectations without falling and holding levels, it's really good for the markets. And I think that's all for now. We don't have economic data. We just have to be patient for news, for negotiations to just complete, and we can have a reaction and opportunities. Volume, it's up here on the Nasdaq. It's also up here on the S&Ps. I think more and more pressure are building up in both markets. But these rejections, I mean, don't predict. It's just as simple as that. As simple as this setup. I am waiting for the Nasdaq specifically to just break out and hold. Just build higher lows. Let me change this to green. Just build higher lows above this resistance. It's just as simple as that. Markets sometimes are quite easy to read, and if you see this chart, you can clearly see that there's building momentum, building pressure. You don't know yet the direction because there's some news yet to confirm, but there's building momentum. And there are some certain nuances like this one. Look at this volume down here. This is big volume, so perhaps this big move was a bear trap. Shorts are getting caught, and if we get resolution today to the upside, I mean, these shorts will fuel up the move higher. We just, okay, here. So patience, and patience. That's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. Also, YouTube shorts like the one that I uploaded this weekend, very interesting, talking about tech exhaustion. Tech exhaustion is a concept in which, just follow the video, but in which you can see that the buyers are no longer piling in, and that weakness might build to the downside. Take a look at that video and really be disciplined and manage your risk in this market. There's still a lot of pressure, building pressure, accumulations to either side. We don't have a deal yet, and anything can happen in these markets. Thank you for your time. Stay safe, everyone, and see you tomorrow.